Hi, my name is Einnur Nabeela binti Muhammad Nizam. My matrix number is 01DIB21F2019. Here I would like to present about one of the topic in accounting, which is prime book entries. Books of prime entry is an alternative introduction is under the journal entry. A journal is known as primary book. Books of prime entry are more efficient variation on double entry accounting. In basic double entry, a double entry is made in the general journal which is posted in the general ledger accounts. In the manual system, books of prime entry acts as the speed entry step, which is instead of trying to remember which account to debit and which to credit, and writing the names down for each entry for each transaction in the general journal. The general journal is reserved for infrequent accrual entries, the more frequent cash entries, and the most frequent accrual entries are divided into specialized journals of cash receipts and cash payments, such as credit sales journal and credit purchases journal. And for medium frequency accrual entries, sales return and purchase returns journal. Apart from not having to write account name each time, the column layout in this specialized journal helps systemize the double entry rules. Most of them can be totaled at the end of each month to provide monthly entries into control account ledgers, as well as reconciliation with summary monthly totals when a schedule of subsidiary ledger accounts is created. Cash reconciliation also is a monthly task, which is made easier by tracking with number transaction, such as numbers checkbooks, where check numbers can be entered in the cash payment journal. For tracking cash receipts, it is recommended banking occurs daily so that at the end of the month, bank reconciliation is easier. Bank reconciliation involves looking at outstanding items from the last reconciliation, then seeing which of these occurred in this period's bank statement. Then, a search is made for unpresented checks and unrecorded receipts, and then payments and receipts that occur through the bank and not through the business. This makes the cash receipts and cash payment journal essential for reconciliation.
Hello everyone, let me introduce myself first. I'm Syasha binti Muhammad Shukri, 01DIB21F2001. As you can see on the screen, our topic today are purchases journal and sales journal. So I will begin with definition of purchases journal. A purchases journal is a special journal used to record all credit purchases. Credit purchases when purchase something and receive today but we pay that later. For example, when you swipe a credit card, your financial institution pays for the goods or service upfront, then collects the funds from you later. In other words, this is a journal that keeps track of the orders placed using vendor credit or account payable. Account payable means there is money owed by a business to its supplier, as well as the current balance owed to each vendor. The entries in this journal are made based on the invoice received from the supplier on the purchases date. Other names used for the purchase journal are the purchases book, purchases day book, and the credit purchases journal. Next, explanation of columns in purchases journal. A typical purchases journal has several columns to record the date, vendor account, invoice date, credit terms, and account payable balance. Amount of column in purchases journal represent a credit to account payable and debit to purchases at the full invoice price. Date column is used to record the date on which the invoice belonging to goods purchases is received. Supplier column, the supplier's name is written in this column, Some business also include a brief description of goods purchases in this column. Invoice date column. The invoice date column is used to record the date on which the invoice is prepared by the supplier. Payment terms column. This column is used to record the payment terms allowed by the supplier. Okay, as you can see on the slide, this is the format of purchaser daybook or purchaser journal. Date records the purchaser date, supplier records the name of the business from which merchandise was purchased on account, invoice number record the invoice number for reference purpose, amount records the invoice amount. Okay, so this is sample question of purchaser daybook or purchaser journal. From the following translation of the trader prepare the purchaser daybook and posting into ledger. So, given on January 5, 1991, purchases good from Russell & Co. January 15, purchases goods from Iqbal Bros. January 25, purchases goods from Moore & Co. And January 13, purchases goods from Marble & Co. Okay, so this is a solution for the question given. Purchaser daybook, date 1991 January 5 for Russell & Co. The amount 2,400. January 25 for Iqbal Bros. Amount 6,000. And January 25 for Moore & Co. 1,500. And January 13 for McBull & Co. 3,000. Last but not least, the advantages of purchaser journal. The details of all the suppliers are found in one place, which helps in reconciling ledger's balance and trial balance. Reconciling mean is used to ensure that money leaving an account matches the actual money spent. Easy to maintain and track data for suppliers analysis. The total credit purchase and type of purchase are found in one place. An essential document for the smooth functioning of the purchasing department. During year-end audit, finding the invoice number related suppliers become accessible from purchase journal, one of the famous and widely maintained books. Lastly, the disadvantages of purchaser journal. A separate accountant is needed, which costs time and money. If the wrong supplier account is selected in the purchaser book, it leads to an error in preparing the trial balance and final accounts. Hello, it's me again. After we learn purchaser's journal, now we need to learn the sales journal. So let's begin. Definition of sales journal. The sales journal, also known as sales book and sales daybook, is a special journal that is used to record all credit sales, a list and a summary of invoice the business sent to its credit customer. Every transaction that is entered in sales journal essentially results in a debit to accounts, receivable account, and credit to sale account. The sales journal is simply a chronological list of the sale invoices and is used to save time, avoid cluttering the general ledger with too much detail, and to allow for segregation of duties. Segregation means it ensures that there is oversight and review to catch errors. It should be noted that the sales journal only included credit sales to customer for merchandise and does not, for example, include cash sale, sale returns, or credit sale for non-merchandise items such as fixed assets. This is the information listed in the sales journal. Date, name of customer, invoice number, folio column, and final amount of invoice. At the end of each reporting period, the sum total of the debits and credit is posted to the general ledger. If anyone wants to research these posted balances listed in the general ledger, they refer back to the sales journal and may use the invoice number listed in the sales journal to access a copy of the invoice. So, this is the format of sales daybook or sales journal. The sales daybook format consists of invoice date or date of credit, sales followed by a description of sale or particular with customer name, and invoice amount and amount on credit sales. Advantages of sales journal. At the time of recording the credit sale transaction in the sales journal, each such transaction is analyzed in the debit and credit aspect. All credit sale transactions enter supported with invoices. There is no such requirement to mention a long explanation for every transaction. It allows an entity to save time and avoid repetition in the journalizing. Repetition means the action of repeating something that has already been said or written. All credit sales entries are grouped in one journal. Disadvantages of sales journal. An entity shall pass correct entries in the sales journal for accuracy of trial balance. If the entity passes any wrong credit sale entry in it, then this will be mismatched between the sale account and account receivable account. It increases the burden of accounting works on entity because an entity can also identify the credit sale transaction from the account receivable account. Trial balance, account receivable account, inventory account will not be tailored if there will be a difference or mismatch in this journal. Tailored means will not be count or calculate, and the entity need to pass the entries in the in this journal very carefully. So, conclusion of what we learned from cell journal today: an entity shall maintain cell journal in the prescribed format by generally accepted accounting principle for an accounting of credit sale transactions so the debtors records and credit sale records can be managed. Its usage is overall beneficial for an entity because it helps for credit sale amount losses. If the company does not maintain a sale journal and forget to pass any credit sale entry, then it will be a loss for an entity. Thank you so much.
Assalamualaikum warahmatullahi wabarakatuh. Nama saya Syazliyana binti. Nombor kad mesej saya 01 TIB 21F 2005. Today I will present about written inward journal and written outward. First, I will explain about written inward journal. What is written inward journal? Written inward are goods returned to the selling entity by the customer. Written inward occurs when sold goods are received back to the seller. Written inward is also terminated as sale return. This return occurs because during the purchase, the buyer is sometimes dissatisfied with the product purchased or the product purchased has damage. Therefore, the buyer has the right to resend the goods he purchased to the seller. If the returned item has been received by the seller, then a credit note will be issued by the seller to be given to the buyer and should be recorded in the book that completes the written inward transaction. Journal entry for written inwards. Written inwards balance written inwards balance will be debit and will be debit the decrease in revenue, and the customer's balance will be credit the decrease in assets, because return inwards is a reduction in revenue for the business, and the customer is a reduction in receivable for the business. Return inward in trial balance. Return inward hold the debit balance and is placed on the debit side of trial balance. Let's see my example. Number 9. Return inward 500,000 in debit amount. Question section. ABC company sell 5,000 unit of goods at 10 ringgit per unit to the customer on credit. After the delivery, the customer found out that they are the wrong product, so they contact the seller and return all of them. Please calculate the return inward and make a journal entry. The journal entry return inward will be 3 columns. First column is account detail, second column is debit, and third column is credit. So the first account is return inward 50,000 in debit side. The detail is account is return inward and 50,000 in debit side. Second, account receivable 50,000 in credit side. In trial balance, it also has 3 columns. First column is detail, second column is debit, and third column is credit. And first account is return inward. The amount is 50,000 in debit side. Next, I will present about return outward journal. What is return outward journal? Return outward is the sending. Return outward is the sending out of goods being returned back to the being returned back by the buyer to the seller from who they are purchased. Return outward occurs when purchases goods are returned back by the buyer. Return outward is also terminated as purchase return. The return occurs when the buyer is dissatisfied with the good purchased due to quality and quantity issues. For the purchase of the good, there suffered a defect within a warranty period of the exchange. The return transaction is initiated. The buyer sends the goods to the sellers along with a debit note following a note for an approved outbound return in his book. Return entry for return inward. Supplier's account will debit the decrease in liability, and return outwards. The return outwards balance will be credit in decrease in expense. It is because supplier is reduction in payable for the business. Return outward is reduction in expense for the business. Return outward in trial balance. Return outward whole credit balance and is placed on the credit side of the trial balance. Let's see my example. Number 8. Return outward for 400,000 ringgit in credit amount. Question section. School XYZ have purchased 100 unit sport sheet at 8,000 on credit. After the sheet arrived, the quality check found that the quality below the acceptable standard, so they have contacted the sellers and decided to return 500 units both X, Y, and Z, both school X, Y, and Z, and the sellers agree to return the sheet. So let's make the account. Account written outward journal entry have it also have three columns. First column is account detail. Second column is debit, and third column is credit. First column is account payable. Account payable. Account account payable 4,000 ringgit in debit side, and second account is purchases 4,000 ringgit in credit side. In trial balance written outward. In trial balance, the detail of account is written outward, and the balance recorded in credit side 4,000 ringgit. That's all from me. Thank you.
In prime book entries, we have a cash book. What is a cash book? Cash book is a financial journal that contains all cash receipts and disbursement, including bank deposits and withdrawal. Entries in the cash book are then posted into the general ledger. Both cash receipts and cash payments are recorded in a cash book. The cash book is also regularly reconciled with the bank statement as an internal auditing measure. Cash books are important because their proper maintenance and reconciliation with bank statement are fundamental for a business. Some businesses maintain cash books instead of cash receipt journals and cash payment journals. This is because all cash receipts and payments are recorded in a cash book. It resembles the cash account maintained in the ledger. In fact, when a cash book is maintained separately, there is no need to keep a cash account in the ledger. For all purposes, a cash book is treated as a cash account or part of the ledger. There are three types of cash book, which is firstly, single column cash book, second, double column cash book, and the last one is three column cash book. In addition, I would like to share about recording in the cash book. All transactions in a cash book have two sides, debit and credit. All cash receipts are recorded on the left-hand side as a debit, and all cash payments are recorded by date on the right-hand side as a credit. The difference between the left and right side shows the balance of cash on hand, which should be a net debit balance if cash flow is positive. The cash book is set up in columns. There are three common versions of the cash book, which is single column, double column, and triple column. The single column cash book shows only receipts and payment of cash. The double column cash book shows cash receipts and payments as well as details about bank transaction. The triple column cash book shows all of the above plus information about purchase or sales discount. A typical single column cash book will have these four column headers, which is date, description, reference or folio number, and also an amount. These headers are present for both the left side showing receipts and the right side showing payments. The date column is the date of the transaction. Because the cash book is updated continuously, it will be in chronological order by transaction. In the description column, the accountant writes a short description or narration of the transaction. In the reference or ledger folio column, the accountant inputs the account number for the related general ledger account. The amount of the transaction is recorded in the final column. What is a single column cash book? Single column cash book is the single column cash book resembles a T-shaped cash account in almost all respects. The pages of this book are vertically divided into two equal parts. The receipts are entered on the left, which is debit sides. Payments are entered on the right, which is credit side. A single column cash book has only one money column on the debit and credit sides to record cash transaction. This is the reason why it is called a single column cash book, or another name is a simple cash book. A single column cash book records only cash receipts and payments. This form of a cash book has only one amount column on each of the debit and credit sides of the cash book. All the cash receipts are entered on the debit side, and cash payment are entered on the credit side. In essence, a single column cash book is nothing but a cash account. A cash account cannot show a credit balance on the principle that you cannot pay what you do not have. This means that a cash account always shows a debit balance or nil balance. As we can see, this is the standard format of a single column cash book is shown. The format in the slide consists of 5 columns on both sides of the cash book. I will briefly describe the purpose or function of each column. First, we have date column. The year, month, and day of the receipts and payments of cash are written in the date column on the debit and credit sides of the cash book. Do not repeat the year and month for additional entries until a new month starts on a new page. Next is description column. The description column starts with the words balance brought down or simply balance. This column shows the cash balance at the start of the current period. After recording the opening balance in the description column, the cash transaction of the current period are recorded. When cash is received on an account, the name of that account is written on the debit side. When cash is paid on an account, the name of the account is written on the credit side in the description column. Next, we have voucher number. Voucher numbers are for every entry recorded in the cash book. There must be a proper voucher. When money is received, an original receipt is given to the payer, and the payee retains a copy. This receipt is called a debit voucher because it supports the entries on the debit side of the cash book. When a payment is made, an original receipt is obtained from the payee. This receipt is called a credit voucher because it supports entries on the credit side of the cash book. The debit voucher serial number is recorded on the debit side, and the serial number of the credit voucher is recorded on the credit side in the cash book's voucher number. Next is posting reference. When entries from the cash book are posted to the ledger accounts, the relevant account number is written in this column. Next is amount column, which is the amount column is used to enter the amount received or paid as a result of a cash transaction. Lastly, we have balancing the cash book. At the end of the day, or at the end the accounting period, the amount columns on both sides are total. The cash column total on the debit side will always exceed the total of the credit side. This is because we cannot pay more cash than we have received. The difference represents the actual cash in hand, which should agree with the amount of cash in the cash box. To make two sides of the single column cash book equal, the difference is written on the credit side as balance carried down or simply balance. Next, I will explain about posting the single column cash book to the ledger. The following points should be kept in mind when posting the single column cash book to the relevant accounts in the ledger. First, the opening and closing balance of the cash book are not posted. Second, the items on the debit side of the cash book are posted to the credit sides of the accounts in the ledger, and the respective account numbers are entered in the posting reference column of the cash book. Finally, the items on the credit side of the cash book are posted on the debit side of the account in the ledger, and the respective account numbers are entered in the posting reference column of the cash book. In the slide, we can see the example question of single column cash book. We started with the cash book first, as on the left side, we got debit side, and on the right, we got credit side. Now, we move to the general ledger, which is there are sales, salaries, purchases, office furniture, stationery, and rent. It is also have ledger for accounts receivable and accounts payable. What is a double column cash book? The double column cash book, it also known as two column cash book, has two money columns on both debit and credit sides. One to record cash transaction and one to record bank transaction. In other words, we can say that if we add a bank column to the both sides of a single column cash book, it will become a double column cash book. The cash column is used to record all cash transaction and works as a cash account, whereas bank column is used to record all receipts and payments made by checks and works as a bank account. Both the columns are total and balance like a traditional T account at the end of an appropriate period, which is usually 1 month. Since a double column cash book provides cash as well as bank balance at the end of a period, some organizations prefer to maintain a double column cash book rather than maintaining two separate ledger accounts for recording cash and bank transaction. We can see the format of a double column cash book in the slide. The above format of double column cash book has 6 columns on the both debit and credit sides. The purpose of cash and bank columns has been explained at the start of this slide, and the purpose of date, description, voucher number, and posting reference column has been explained in single column cash book articles. So, here we got the example of question for double column cash in the slide. We started with the cash book first, as on the left side we got debit side and on the right we got credit side, and continue with the general ledger that contains sales, salaries, purchases, office, furniture, rent, stationery, and drawings. Next, we have the ledger for accounts receivable and accounts payable. What is a 3-column cash book? A cash book with 3 columns for discount received and paid, cash transaction, and bank transaction is known as a 3-column cash book. A 3-column cash book, also known as a triple column cash book, contains 3 money columns on the both debit and credit sides, one on each side for recording discount, cash, and bank amounts. If a business holds a bank account frequently, makes receipts and payment through that bank account, then it is useful to maintain a 3-column cash book rather than a single or double column cash book. In a 3-column cash book, 3 columns are provided for the amount of each side. One column records cash, receipts, and payments. The second records banking transaction, and the third record discount received and allowed. Although single and double column cash books are alternatives to a cash account, the 3-column cash book serves the purpose of cash as well as a bank account. The common format used in a 3-column cash book is shown in the slide. It is worth mentioning that the format of a 3-column cash book is similar to that of a 2-column cash book. The only exception is that a column is added in a 3-column cash book to account for bank-related transaction. There are several points we must know about 3-column cash book. First, opening balance. The opening balance of cash in hand and cash at bank are recorded on the debit side in the cash and bank columns respectively. If the bank balance is a credit balance, which is overdraft, then it is entered on the credit side in the bank column. Next, we have receipt of check or cash. If a check is received and deposited into a bank account on the same date, it will appear on the debit side on the cash book in the bank column. If the check is not deposited into a bank account on the same date, it is treated as cash and therefore the amount will appear in cash column. Finally, in the usual manner, the receipt of cash is recorded in the cash column. Lastly, we have payment by check or cash. If a payment is made by check, it will be recorded on the credit side in the bank column. This is because the cash at bank has decreased. If the payment is made in cash, it will be recorded in the cash column in the usual manner. Next, we have bank charges. Bank charges are recorded on the credit side of the cash book in the bank column. This is because cash at bank decreases as a result of such charges. As we can see again, in the slide shows the example question of 3-column cash book, and we started with the cash book only. As on the left side, we got debit side, and on the right, we got credit side. Is the advantages of cash book. There are 3 main advantages to maintaining a cash book. First, in almost all businesses, most transactions are related to cash receipts and payments. If a cash book is not maintained and cash transactions are not recorded in the journal, unnecessary time and labor will be required to debit and credit the cash account for every cash transaction. The second advantages arise after considering that within most of businesses, the scale of cash dealing is usually large. Since cash can be easily stolen by dishonest employees, the cash record must be up to date and properly supervised by a reasonable person. For this purpose, it is essential to maintain a cash book to record all cash transactions accurately and systematically. The final advantages is that the cash book is a book of the original record and part of the ledger. If all cash transactions pass through the cash book, we can avoid the substantial labor needed to post every item, which is receipts and payments of cash, individually to each account in the ledger. What is a general journal? The general journal is the journal of the company in which initial record keeping of all the transactions is done which are not recorded in any of the specialty journals maintained by the company, like purchase journal, sales journals, cash journal, and other than that. Whenever an event occurs or a transaction happens, it records in a journal. Journal can be of 2 types: specialty journal and a general journal. A specialty journal records special events or transactions that are related to the particular journal itself. There are mainly 4 kinds of specialty journals, which is sales journals, cash receipt journals, purchase journals, and cash disbursement journals. The company can have more specialty journals depending on its needs and type of transaction, but the above-mentioned journals contain the bulk of accounting activities. All other transactions not entered in a specialty journal account for in a general journal. It can have the following types of transaction, which is account receivable, accounts payable, equipment, accumulated depreciation, expenses, interest income, and expenses. Next is general journal accounting. Double entry bookkeeping is the most common method of general journal accounting. Every business transaction done by an exchange between 2 accounts. There are 2 equal and opposite accounts for all the transactions, namely credit and debits. Hence, when a transaction records in a journal, it debits one account and credits to the other. For example, a company purchases $5,000 of inventory using the cash. An entry in the journal would be made whereby the cash account is decreased by $5,000 and the inventory account is increased by $5,000. Next is general journal format. It provides the chronological order of all non-specialized activities. It consists of 4 or 5 columns. It is a date of transaction, short description or memo, debit amount, credit amount, a reference number which is referencing to journal ledger as an easy indicator. Some examples of account in the ledger is account receivable as an asset account, account payable as a liability account, retained earning as an equity account, product sales as a revenue account, and cost of goods sold as an expenses account. There we can see the example question of general journal. The conclusion of general journal is an initial record keeping that records all the transactions except for the ones which are recorded in a specialty journal like cash journal, purchases journal, and other than that. It states the date of the transaction, description, credit, and debit information in a double bookkeeping system. These journal entries are then used to form a general ledger, and the information is transferred into respective accounts of the general ledger. The ledgers are then used to make trial balance and finally the financial statements. However, these journals were more visible in the manual record-keeping days. With the advent of technology, the task of record-keeping has been made easy with all the information being stored in a single repository with no specialty journal in use. That is from me. Thank you.